Hey, Mike Swanson here. Today, the Dow fell 312 points, S&P down 33 points, the NASDAQ down 74 points, and this all happened the day after Obama got reelected, and once again, on the television, instead of talking about the election, they started talking about the fiscal cliff, saying that's the new thing to worry about. What is the fiscal cliff? Well, it's $100 billion in cuts in government spending that's supposed to wreck the economy if Congress and the president don't come up with a deal on spending and the budget and so forth. Well, a funny thing happened. I'm going to talk about the market, what I think's going on with it, and why you shouldn't worry. But a funny thing happened. By the end of the day, the Speaker of the House of Representatives came out and he said that he is now going to talk to the president together and work out a deal with him that will probably include higher taxes. So now the election's over, Obama and Congress will start to work something out. They've just pushed this issue to the side and created this crisis situation, and now they're going to work together now that they're not worrying about campaigning or trying to get reelected or whatever. I don't want to really talk about the election. You can turn on the TV and watch that. You can get on the internet. You can read people rant and rave about how happy they are or how upset they are. Personally, I don't care. I thought Obama was going to win anyway, but I think the Republicans will win next time. So there you go. Let's talk about the stock market. That's what you're here for. And you're in the market. I'm in the market. That means we lost money today because Dow fell 300 points. And this is my portfolio, and you can see I lost $3,700. And that sucks. But I'm not too worried about it because I actually think that today represents finally a sign of an end to this correction. And here's the thing. Corrections usually end in a panic washout. And I think that's what today's selling represents. 90% of the volume on the New York Stock Exchange and the NASDAQ came from sell orders. Now, going into this month, in the past few days, really 10 trading sessions just about, the NASDAQ has been hanging on its 200-day moving average. It tried to bounce the other day, came back down Friday, right? If you're following me on Friday, it came back down. I actually sold a couple positions because I was getting pressured in my account, and I had to reduce the position size in case the market broke support, which is what happened today and fell more. I didn't, and so doing that has helped me, and I'm actually in a position where I can potentially buy more if I want to. But anyway, I wasn't sure what was going to happen looking at this thing yesterday because the market was trying to hold support, and that meant it was either going to break out, start going up, or it was going to break support and come back down lower. And I was thinking that if it broke support, I wasn't sure what was going to happen, but if it did break support, we'd get a final drop, and this would mark, finally, the end of the correction. And I think that's what we're seeing right now. You know, I'm making this Wednesday night. It could be the market gaps down tomorrow. If it does, I think the gap down would be a buying opportunity. Doesn't gap down, you know, we're probably just going to go up. Quickly, here's the S&P 500. Same story, holding the 1400 level, smash down below it, right? Here's the Dow, essentially 13,000 is the level, boom, smashed right below it. Now here's the interesting thing though, you know, that's the headlines, right? Those three market averages is what everyone watches. But one thing that was kind of interesting was most of the stocks I actually own weren't down as much as the market averages were, which is real interesting because on Friday I had to sell because some of the stocks I owned were getting completely killed. Newmont fell, which I bought back here actually, rallied back up, but it came out with horrible earnings and crashed, so I ended up selling it, took a profit and sold it. I don't own Barrick, but it crashed too. Lots of gold stocks crashed or sold off real hard. HL did. I own that one. Had bad earnings too. But interestingly enough, this is GDX, the gold stock ETF. It's held up. You know, it doesn't look like it's in some sort of bear market. And today it was in the green, 1.45%. Even though the whole rest of the market was collapsing, this thing was green, right? And GDXJ, which I do own, it was green too. The gold itself was up. What about commodities? Commodities were down just a little bit, but not down as much as the U.S. stock market was. Now let's look at world markets. There's a point to all this I'll get to. Of course, they were down too. This is a ETF that invests in big cap stocks all over the world to exclusion of stuff in the United States. It was down about half as much as the U.S. stock market was. The emerging markets ETF wasn't down as much. Now look at this carefully, because it bottomed October. The world markets bottomed in June and July. It's gone up. It's building a base. There's no sign it's in some giant correction or anything. I think it'll break out 42 low. 42's resistance. When it breaks out, it'll launch an end of the year rally. And that's the story for these are ETFs I own in Europe. They're just simply going sideways. You know, what are the others? EWK, right? EWO. You're just going sideways. There's no big crash. There's no collapse. There's no bear market. Right now, the United States stock market is the weakest market in the world. And it's not because it's in a bear market, but because the other world markets have gone into massive bear market bottoms in June, July, August. And they're now, I believe, a new bull market. So they're naturally going to outperform. And the same is true with gold. So despite the big moves in the market, you know, Dow down 300, if you look outside those three market averages and at the rest of the world, nothing has changed today. Nothing has changed with the re-election of Obama. I don't think things would have been much different if Romney got in. Maybe the market wouldn't have fallen 300 points today. But the reason why it did, the real reason, the important reason, is because the markets all over the world had been in a sharp rally from June to September, with the U.S. market lagging, right? And they've been in a corrective phase, and corrections end most of the time with a final sell-off washout that causes just about everyone you know that's in the market to panic. And it causes you stress. It causes your stomach to churn. It makes you wonder, what am I doing in the stock market? You know, and that's how they end. And you know that. You've been through corrections before. It's nothing new. And there's no reason to panic. So the S&P 500 is at closed today at 1394, and it peaked out at 1474. That's a drop of 6.5%. All right, that's not a giant drop. It's not a big deal. Now the Nasdaq obviously fell more, and it's fallen about 9-10%. Now that's a average correction in a bull market. In fact, that's the type of correction we saw from April. A little, well, what happened in April, June? Let's see, 12.67 about, 14.17 about 11%. That's par for the course. And look, all the markets are still above their 150-day moving averages. And what you saw in that news today, fiscal cliff is really nothing to worry about. They're talking about working out a deal. I believe them. They just kept their mouth shut and kept away during the election. That's what politicians do. They maneuver, they jockey for power, and when the election's over, they talk and they do make deals and they do what they got to do, despite all the partisan rhetoric that you see on the television screen. One more piece of news I got to show you, and that's Greece. Look at, this is how the media works, right? There's 100,000 people marching in Greece, and they're going to show you the place is on fire and burning up, but the country has not been bombed, it's not been devastated, and Greece lawmakers just approved the austerity deal. So, remember Greece was the big scare in the summer? I actually bought into the fear. When it was the end of the world, I bought right here at 12, went up to 19. We're getting the natural pullback after like a 100% move, and the headlines are still bad. But that's what happens in bull markets. Bull markets go up when everyone that is scared. They climb walls of worry. It's when everyone's bullish that you got to be scared that the market's making a massive peak and going into a bear market. But we're not there. And in corrections like this, people get fearful and scared, and that's what we're seeing. Finally, the VIX. I don't know what exactly that is. And we saw panic in the market. We saw the put-to-call ratio go above 1. We saw the VIX go up 8.5%, which measures the volatility of premium that people are buying for puts. It's a gauge of fear in the market. I wouldn't mind seeing that gap up tomorrow and then come back down, much like you saw here. This tends to do that when the market makes a big bottom. So I wouldn't mind seeing some action like this, a gap up and then come back down. But I don't know if that'll happen or not. A gap. I would really like to see the market gap down tomorrow and then have a reversal. But I don't know that's going to happen. But either way, I've been preaching this, and I'm going to say it again to you. I think the real opportunities to invest aren't in the United States. They're in the rest of the world. And today proves that out because the Dow was down 2.36%, while this global market average was down 1.36%, still outperforming. There's no, you couldn't even tell. It ain't broke support, right? And that's the story with most world markets. It's commodities in Europe that present the great investment opportunity point now. And I still think so. And I think a day like today is you use it as a buying opportunity if you're not in the markets or if you want to buy more. That's what they're for. And these are the days you should be waiting for that should make you hungry to take advantage of it and buy something, right? So I just want to encourage you not to get caught up in what's going on in the Dow and S&P. I mean, it's a world. It's a world of markets all over, and the U.S. is just one thing, right? And I think if you don't look, I'm going to leave you. I keep saying I'm going to leave you, and I keep talking to you, but it's because this stuff's so important. But look, you may not like the outcome of the election. You may have. I know a lot of people really upset about it. Okay, and I didn't get emotionally invested in it because I didn't think Romney was going to win, and he didn't. And so I just didn't let myself buy into hoping he was because I didn't want to be that disappointed. But so many people I know are so upset right now that are hardcore Republicans. Of course, there are some people happy, that Obama won. But there are people really upset. And I think what's really happening is the economy's bad. It's been bad now for years. And there's no sign it's getting better in any meaningful way. And a lot of people are in desperate straits and desperate situations, and they saw this election as a potential to try to make change, that things are so bad, if I can go to the poll and cast a vote and they can change the president, somehow the economy could be changed too. And then, they cast their vote and they don't get the outcome they want. And now they've lost hope. And a lot of people, just gauging by comments I've heard the last few days, or today, and, see on the internet, you can't think like that, man, if that's how you're thinking. Because, for one thing, I don't care who the president is, they can't change this economy overnight. We're in a dire mess that's been created over decades, and this is the outcome of it. And it's a rolling crisis that's going through phases. The big boom in 2000 was not a healthy economy. The economy was not growing fast. That was actually a crisis phase, and people didn't even realize it. But the Federal Reserve cut interest rates in a panic from 1999 to 2001, and they overstimulated the economy. They created a housing bubble, and that wasn't healthy at all. That was the first phase of the crisis. Then the bubble popped, and no one paid attention to that for like 2 years. And then hedge funds on Wall Street started to go bankrupt, and no one paid attention to that. Banks were functionally bankrupt. Their balance sheets were destroyed. And for a year, no one paid attention to that either. And then in 2008 in the fall, all of a sudden the economy ground to a halt, and the stock market crashed. And the U.S. GDP shrank by like 5% in 2 consecutive quarters, something that hadn't happened since the 1930s. George Bush left office. McCain and Obama took his place. The Fed engaged in so-called quantitative easing, a term that the public can't understand, but a term that simply means they're printing money out of thin air to finance the trillion-dollar deficits. The deficit started under Bush's bank bailout program, approved by Obama, never cut since. Just money that's just spent madly all over the place. And now that's the economy we're in. Well, that's the phase of the crisis we're in. And if Romney had come in office, he can't stop that. It's set in motion. It's like you're watching a boulder come down a mountain. You can't just get some dude who's going to step out of it and try to stop it with his hands. No individual person can stop what's going on. It's just the secular trend that had been built up over such a long period of time. Now, we're about to enter, I believe, the next phase of this. And I think, again, no one understands. I think very few people realize that. And the next phase of this is going to go on. It hasn't even really started yet, but I think it's about to next year. It's inflation. And that phase will continue for 2, 3, 4 years, possibly a little longer. But it's going to go on for several years. You're going to see gas prices go up. And all this, this situation has been created by both political parties, right? And in the end of that, as that finally plays out, eventually interest rates will spike up, and we'll have another real bear market in the stock market. We won't have the S&P 500 correcting about 10%. We'll have a real bear market like we saw a couple years ago. And finally, that bear market will represent the final end of this crisis, this disaster that started in 1999, or really 1998, and we're in the 14th year of it. And it's like is that 14 years. It's incredible. And it could be 20 years by the time it's over. It's 6 more years. So that's what's going on. So we're not about to hit a giant bear market like you saw in 2008. we're about to enter the inflationary phase of this crisis. That means gold is going to skyrocket over the coming years. That means commodities are going to go up. And that means stocks generally are going to rise too. But the most undervalued markets in the world will go up the most. And that, frankly, is not the S&P 500. It's markets in Europe. So that's what's going on. And if you believe what I'm telling you, there's money to be made. You know, it's bad that the economy sucks. It's bad that inflation's going to come. It's going to lower people's living standards. It's going to make the average person suffer even more than they have. That's why I'm pretty confident a Republican will win in the next presidential election. However, all of this, so you know, even how bad you want to talk about it, it represents an opportunity in the financial markets. And that's what I'm dedicated to talking to you about and trying to profit from together. All the political stuff we can leave. You just leave that to the television or whoever you may. If you're into that stuff, you probably got people you like to read or listen to, but they're not talking about making money in the markets. They're not talking about, you know, they just want to, you know, I don't want to talk about how bad everything is. I want to talk about how we as people can do what we can to understand what's going on in the world and take advantage of what's happening. You know, even in the 1930s, there were people making money, you know, in the financial markets. And even in companies. There were companies that were actually made in the Great Depression that became household names. Just because times are bad doesn't mean there isn't things to do and money to be made if that's what you want to do. You know, if you want to sit there and dig your head in the sand, you know, whatever. And it's a lot of wasted time to sit there and watch the TV every night and listen to all the political crap. Cut it off. It's a waste of your time. It's just going to put negative. I mean, that's for me. I mean, you may like hearing that, but for me, it's just negative energy. I don't need it. I want to focus on things to do and doing stuff. So anyway, I've talked already minutes ago, or longer than I wanted to, but it's important. And anyway, you know what I'm thinking. So I'll talk to you later.